Good morning, ladies and gentlemen. The time is 10 o'clock, and today is the 8th of March. And after having a very interesting session post the exit polls, we saw at one point that SGX Nifty almost breaching 16,000. From there, by the close of SGX Nifty, it closed around 200 points down, closer to 15,650. So right there, quite a big swing of 350 points. This morning we were looking to gap down around 100 points, but more or less we opened within yesterday's range. Now, after opening within yesterday's range, two things happened. Firstly, the triangle that I wanted to trade, 15,200 and 16,000. This closed yesterday at 120 rupees. This put closed at 55 rupees. This call closed at 65 rupees, giving around 120 rupees to the triangle. Overnight, it lost quite a bit of that. It opened about 85 rupees. And my idea was with marginal stop loss, try and short that to see if it comes down further. Because right now markets are very unpredictable. And how did I come up with this strikes also? See, basically 16,200 was where we kept taking support. From there we broke down. So 100 points above that. And basically equal premium on the put side I'm getting for about 15,200. And roughly it is equidistant as well from where we opened. So that was more or less the plan. Now, after entering my position here, I got an average of basically 45 and 39, which means between the two, I had 85 rupees. Now, very quickly, just as we made this 1, 2, 3 and third candle, just as we were testing yesterday's close, I had to get stopped out, and I'll go over why. So if you see my stop out prices, it is about 91 to 92 rupees, 7 points higher than what I shorted for. And the reason for that is I shorted this call around here, 45. Now it is breaking into yesterday's range. So if you see yesterday's closing last few hours range, it is breaking in here. And if we start to make this breakout, it can be very problematic because the puts don't give up value in the current market. Puts don't give up a lot of value because of the overnight risk. So on one side you have calls gaining because market is making an up move. First of all, you've shorted calls into a gap down, which means you've shorted them at quite low prices, and then they're going up because there is a delta risk, and puts are not losing. So if you see that 39 put that I shorted, I covered at 37, and the calls that I shorted around 45 I had to square up much higher. So I was trading 21,000 sizing, and on that about 7 points, and that's fine. This market, you have to give stop losses, and I'm happy that I took this stop loss, because if this was a green candle and this was another green candle, this triangle that I covered for 91 rupees, I would definitely be covering for 100 rupees. So it would have been just one candle difference between 91 and 100. And at this point, see, in this market, it's tricky. So you have to take calculated risk. There has been an IV crush overnight. You're still trying to anticipate a further fall off. So you take a position. Maybe you get that further fall off. It's difficult to call. Like a lot of people say, oh, there was such a big fall off last night, so low probability that you see a continued fall off at the open. Yes, that is true. But nobody can say that it is completely unlikely that we see that fall off. So regardless, you take a calculated risk. It didn't work out, and well within what I consider acceptable risk, I've taken a stop loss. And going by how lately things have been on every day except Wednesday and Thursday, we will see that the pricing of these. So I covered at 91. If I had even waited for one candle, I would have got an exit at break even right here. But it's too risky. You can't just hope. I mean, my accepted risk for today was okay. I'll have a 5-point stop loss. It went a little higher than that to 7, but that's okay. I can't wait for this pullback to exit. That can work out very badly. After that, we have had this continued move, and now Nifty is in the green, and this particular spread also is trading for about 87, 87.5. So it has come down in value, but now this is too far gone, and I will not be taking any entry because I've already taken a stop loss. So that more or less is the summary for the day. For now, this will continue to be the pattern. The idea will be wait for what kind of spread you can take in the morning. Take it with, try to get a good entry. Difficult to time a perfect entry. Keep a tight stop loss. If the trade works out, great. If the stop loss hits, great. And that's more or less it. Thank you so much for watching, and I will catch you at the next one. Take care. Bye bye.